Hi everybody. In this video, you will see accounting for bad debts. Okay, in this question, this is a sample question. In this question, the question says that the following transactions relates to DD Berhad for the year ended 31st of December 2015. DD Berhad is a company. There are 1, 2, 3, 4, 5, 6 information. And then the question required you to discuss the importance of account receivable balances to the customers of the business. And the second thing is the question asks you to journalize the transactions. So let's see the first question first. Discuss the importance of account receivable balances to the customers of the business. So to the customers of a business, the account receivable balances is important. It is important this way. If a customer sees that a business has higher than industry average account receivable, then maybe the customer will see that it is easier for him or her to get credit from the company. In another way, if a customer sees that a business account receivable is lower than the industry or sector average, then the customer maybe will perceive that it is difficult for him or her to get or to do credit purchase in the company. Okay, then see the second question. The second question asks you to journalize the transaction. So let's see how to journalize the accounting transactions related to bad debts. See the first transaction. So the first transaction says the beginning balance of allowance for doubtful debt was 30,000. So information about or related to January 1st is only telling us what is the beginning balance of the account allowance for doubtful debt. There is no need for any journal entry. In accounting for bad debts, there are two most frequent accounts that you have to use. First is the allowance for the doubtful debts, and the second account is bad debt expense account. Okay, let's see. And then the transaction on 15th of January, the transaction is reinstated Dadu Berhad account, which had been written off in the preceding year as collectible. Received cash 2,000. This information says that the company has written off Dadu Berhad account. Dadu Berhad account receivable last year. And suddenly, on January 15 this year, Dadu Berhad come and pay the account receivable that have been written off. So this transaction is a transaction of reinstatement of the account receivable account. So how to do the journal entry for this? So you have to write the date, January 15. So remember, there are two the first thing that you have to do to reinstate the the account the first thing that you have to do to journalize this kind of transaction is you have to reinstate the account first. So how to reinstate the account? The way to reinstate the account is January 15, you debit the account receivable of Dadu, account receivable of the company that just paid back the account receivable. In this question, the company that paid the account receivable is Dadu Berhad. So debit account receivable Dadu Berhad. The amount is, in this question, 2,000. And then you have to credit an account called bad debts recovered. You have to memorize the name of this account. So every time you have to reinstate an account receivable, so you debit the account receivable and credit bad debts recovered. These journal entries are to make the account receivable exist again. Before this, you have closed the account receivable when you return off the account. Now you make it exist again. The second thing that you have to do for this kind of transaction is you record the receipt of cash related to this account receivable. So you debit account cash, $2,000, and then you credit account receivable. So there is no more account receivable. You reinstate and then you close back the account. That is the way to record the reinstatement of the account receivable. Okay, the next transaction. 20th of March, wrote off 5,000 owed by Ragi Berhad, which was bankrupt. So this is journal entries to record return of an account receivable. In this question, the account receivable is for Ragi Berhad. So the way to do the return off is like this. Very straightforward. To return off the account receivable, you have to debit the allowance for doubtful debt. Allowance for doubtful debt. Always remember, when you return off an account, you use the allowance to return off the account. So the amount related to this transaction is 5,000. So you debit allowance for doubtful debt, 5,000. And then you credit the account receivable. Account receivable in this question is the account receivable is for Ragi Berhad. The amount is 5,000. Okay, very simple to write off an account. Okay, May 16. May 16, the question says that the company received 50% of 20,000 owed by Saga Berhad. So Saga Berhad is a customer, a bankrupt business, and wrote off the remainder of the debts. So May 16. First, you have to record the cash receipt. So how to record that? debit account cash because the business received cash. Debit account cash 10,000, which is 50% of the 20,000. So debit account cash 10,000, and then credit account receivable. Account receivable of the company called Saga Berhad. $10,000. And then you do the written off. So remember the way to do the written off, or to record the written off: debit the allowance and then credit account receivable. Saga Berhad has a balance of account receivable 20,000. 10,000 is paid. Another 10,000 or another 50% is has to be written off. So when you have to written off, you debit or use the account allowance for doubtful debt. The amount is 10,000, and then you credit the account receivable. See, when you written off the account receivable becomes zero. Account receivable for Saga Berhad 10,000. So you have done this one, this one, this one, this one. Okay, now there is another transaction on the 12th of September. 12th of September, the company reinstated Mama Berhad account, which had been written off in the preceding year as collectible. Received cash 6,500. So remember how to reinstate to do the reinstatement. So this is the way. You have to do the same thing. Okay, September 12th. You have to reinstate the account. So how to reinstate the account? Debit the account receivable for Mama Berhad. The amount is $6,500. And then after you have debited the account receivable, remember to credit account bad debt recovered. By the same amount, 6,500. The second thing that you have to do is to record the cash payment. The Mama Berhad had paid 6,500. So you record the cash payment. So debit account cash 6,500, and then you credit the account receivable again. Mama 6,500. Then you are done. So see here, you are done for the September 12th transaction. And then the last transaction is on 31st of December. Estimated 20,000 to be uncollectible debts based on the accounts receivable balance of 2 million. Okay, now this is the end of the year. At the end of the year, the company has estimated that 20,000 of account receivable to be uncollectible. So on this day, you have to recalculate the allowance for the doubtful debts. This is the estimate for the doubtful debts for the year 2015. So let's see how to do this. The date is 31st of December. December 31st. Okay, now you have to do, you know the estimated uncollectible amount is 20,000. So you know that you have to maintain $20,000 in the account of allowance for doubtful debts. How to maintain the $20,000? So you have to check the account first. For the accounts, for this business, for the account of allowance, okay, allowance for doubtful debts, the beginning balance according to this question. See here, at 1st of January, the balance of the allowance is 30,000. So see here, the balance is 30,000. Okay, and then you check during the year, several times the business has used the allowance. Okay, now you check 15th of January. The business did not use the allowance, but 20th of March, the business used the allowance. How much the business used the allowance? The business used 5,000 allowance. So you have to minus for March 20, the business used 5,000 allowance. Then you check again. On the 16th of May, see here, 16th of May, the business again used 10,000 allowance. Okay, so the beginning balance is 30,000, and then the business used 5,000, and then on May 16, the business again used 10,000 allowance. September 12th, the business did not use the allowance. Good. Okay, so now how much is the balance of the allowance at the end of the year? At the end of the year, the business has a balance of 30,000 minus 5,000 minus 10,000. So the balance is 15,000 allowance. At the end of the year, the account for allowance for doubtful debt has a balance of 15,000. At the 31st of December, the business estimated that the doubtful debt for the year is 20,000. So balance 15, you have to maintain the account at 20,000. So how much you have to add? You have to add another 5,000 only. 15 plus the 5,000, the account for allowance for doubtful debt has a balance of 20,000. So that the way to do that is the journal entry that you have to do to show that you maintain 20,000 of allowance is like this. You have to add the allowance account 5,000, isn't it, to make it become 20,000. So account allowance for doubtful debt is an account that has credit balance. How to make it becomes 20,000? You have to credit the account. The account has a credit balance, so to make it higher, you have to credit the account. The account has a credit balance of 15,000. How to make it become 20? You you have to credit another 5,000. So you have to credit the account allowance for doubtful debt. You have to credit 5,000 to make it become 20. What is the account that you have to debit? This one you have to remember. You have to debit the account bad debt expense 5,000. Okay, you are done. These are the things that always happen during the year. Sometimes a business has to return off an account. Another time is the business has to reinstate an account, and it happened maybe several times during the year. At the end of the year, the business has to estimate what is the uncollectible amount, and then the business can do journal entries to make sure that the account allowance for doubtful debt is maintained at the estimated level. Thank you very much. You can communicate with me in the comment section.